let's kick things off. First things first. Mike, how's your Canada Day?
Canada, you know what? Canada Day was a bit surreal. I wish I could say that we had the weather to be conducive to go outside enjoying it, but it was a little bit of, we had the liquid sunshine. So we made the best of it, but it definitely was surreal relative to what usual Canada Days are.
Yeah, right in the middle of the week, kind of awkward.
Yeah, a little different. It's funny because I was talking to some guys today and I'm saying, hey, how was your weekend? And they said, what weekend? And then I just remembered that we just had a day off yesterday. But to me, you just sort of lose and just think, oh, it's Monday today because you had a day off, but really because it was midweek. And that's how it kind of, it does feel a little bit different and not quite the same as a long weekend.
Yeah, it was a breaking up the week, I guess. But no, you're right. That being said, too, a lot of people do take the rest of the week off anyway. So you might have
hardworking guys. Hey, except hardworking guys like you and I, don't take the Thursday, Friday, make a nice 5-day out of it, which would have been nice.
Yeah, well, hey, maybe if you were having better weather, you would have considered it. But yeah, no, exactly. But I guess so. Let's hop into it. So we were getting some questions, around a kind of banking partnership. Now I know we can't say their name, and so we'll say that now is we can't necessarily say the name, but we can chat about what that partnership looks like. How each party benefits and kind of go into more details there. I thought it would be a cool little video to do that. Do you want to maybe kick things off? What does a partnership with a top 5 bank in Canada kind of look like?
Sure. So the relationship with the bank has gone on for several months in discussions, and it was and one of the top 5 banks that we've been dealing with was an introduction to us through industry, and they've always wanted to get into this sector of the market because clearly the sector of the market that we're in, which is the underbanked or the financially excluded, is growing by numbers. Over a third of Canadians are off the grid. So that is an enormous amount of potential customers for the banks to go after and market, but they can't because they're risk adverse and they have certain mandates what they do. So what they're doing is, in partnering with us, we're de-risking the customers for them to eventually go through the attrition to be able to become a client of the bank. So in offering this co-branded secured credit card for the customer, it's a win-win-win scenario. And I'll use it this way. When a consumer goes into insolvency, and usually they go into, as the consumer proposals become more and more mainstream and then the bankruptcy and that. So in this day that we live in of credit, what's the first thing that's going to be the most asked for a person that's gone into a consumer proposal? And say, well, how do I get a credit card? I don't have, very few people take cash, don't have cash. So how do I at least be able to make it from paycheck to paycheck? Because people live on credit with it. So that's probably one of the, I'd say that's the most relevant question asked by a consumer to the trustee when they file their consumer proposal. And they're going through their credit rebuilding seminars, as they have to offer them a few hours of credit counseling, and that's one of the things that go forward. So the relationship between us and the bank is that the bank will provide their full infrastructure, their brand, their confidence in knowing who's behind it. We will provide the security. So in other words, we'll provide the loan for the secured credit card. For example, and we're not talking lots of money, $200 to $500 on a secured credit card. So what this does is it is a huge marketing tool for Marble to go forward to gather a lot of customers. It also allows us to capture the customer a lot sooner down their credit rebuilding. Rather than waiting 12 months while they're in a consumer proposal and market to them, then we can market to them 1 month, 2 months after they're in a consumer proposal by offering them this secured credit card. We then can track their transactions. As part of it, they'll give us access to their bank account and monitor their transactions, their incoming, their outgoing. So then this data will help us as we're going forward in building our Marble score, in assessing the risk towards offering them a consumer proposal loan, our fast track loan 12 months down the road to pay out their consumer proposal and start rebuilding their credit. So, as well as the trustees are really interested in being able to offer this to the customer. Now, there are other, like Refresh that offers a secured credit card, Home Trust offers a secured credit card. The problem is everybody's interested in it. They send them the application, say, okay, send me the $500 and then we'll give you the secured credit card. Well, that's where it falls apart. The consumer doesn't have $500 to put on the credit card to do that. Some do, some don't. It's like a forced savings and that. So what we do is we then lend to the consumer the $500, for example. That goes onto the credit card. So not only do we then report to the credit agencies a trade line because he has a loan, but we also report on a monthly basis on the transactions on the credit card. So he gets 2 forms of credit reporting that will speed up his credit rebuilding for that. Eventually, when the consumer gets to a credit score that the bank will look at and deems acceptable, they've all of a sudden acquired a customer they'd never ever be able to acquire. So it is a de-risking for the bank. It is an ability for us to capture the consumer a lot earlier on and offer them not only the credit card but then eventually the fast track product. Collect more data. It enables us to be able to work more closely with the trustees across Canada. It's a win-win-win scenario. So it is something that is unique because we, for the consumer, we give them the ability without, putting them in further financial stress of where do they come up with the money for this credit card. So it's been a very good relationship. Now, COVID has slowed it down by about a quarter. We should have been out by now with it, but because of COVID, we've had to slow it down they said, look, you know what, a lot of stuff going on and everything. We just had to slow the launch of this. So we should start seeing it probably later this summer, early into Q3, starting to go forward and launch on it.
Awesome. So, pretty much to sum it all up, obviously the person who needs their credit card, they get a credit card and they get to put things on their credit through Marble, which is great. So you guys are rebuilding them there. The bank is able to get another client. So awesome for them. And then you guys are, of course, able to get another client. So it's kind of a win
more
across
data.
the board.
We get the client earlier in the cycle. So we get to learn more about them earlier on. So not only do we have, and with that, it's another customer acquisition tool. That's what it is. We have the referral partners that we've spoken to in previous videos and how that works in our business model. This is another customer acquisition tool, which the cost of acquiring the customer is going to be us lending them the money and trying to help them rebuild their credit. Now, there will be some defaults. There will be some people that'll take advantage of it. There will be, but through our process and through our algorithms and through our data science, the more customers and more data we collect, the better we are at adjudicating that customer, and our analytics will tell us, yes, lend to that consumer, give them a credit card, or no, you shouldn't.
Yeah,
and that's all about the data.
Yeah, it makes a lot of sense, obviously. Data's power. But going into, I guess, something that's interesting, talking about growth, momentum, I want to kind of get your ideas and your thoughts on, obviously, I would imagine having a partnership with a bank makes the conversation with other banks or other major institutions that much easier. Is that definitely the case?
I think, bottom line, it adds credibility to market.
Yeah.
It really does add credibility. Now, if we've got a relationship with the bank and we're going forward, do we set up a relationship with another bank? Not really. Now, clearly, as we go forward and we continue, and the success of how the product goes, then that provides us more negotiating clout to get better commercial terms on it. It's like anything else. When you start off, it's all about player acquisition, not as much commerciality. But as we go forward, we'll be able to ask for a higher percentage of the transaction fees, those type of things. And so it's a win-win scenario. But for us, it's all about the data. It's all about the relationship. It's all about the credibility.
Yeah. That makes a lot of sense. Do you want to talk about, maybe what this would mean in terms of potential client or revenue growth for Marble?
Well, you know what? Sure. There's over 120,000 insolvencies yearly, and it continues to grow by about 17% a year. Over 60% of those things are consumer. Of those insolvencies are consumer proposals, which continue to grow. Us being able to offer this product will give us a bigger share of that market, because we'll able to offer that across the 2,000 plus so trustees across Canada, in providing them with a credit rebuilding tool for their customers, because they're all about helping their customers, trustees. They're mandated on the credit counseling to help these consumers down the path of financial wellness.
Yeah.
This is a tool that they'll be open to offering their customers, which will give us a bigger percentage of the market.